Good morning, everyone, and welcome to the Money Control live stream. You're watching markets with Santo and CJ. Well, it's looking set for a nervous week for the global financial markets just after the UK pension fund system just came to the brink of collapse last week. Now it seems the global markets focus has turned to two European giants of the financial system, that is Credit Suisse and Deutsche Bank.
Who have been making news every now and then.
Every now and then, I mean, since the time Lehman Brothers collapsed, Santo, these two banks, from Europe, one from Switzerland, the other one from Germany, have always been in the news whenever the global economy has been wobbly. And if you look at, financial Twitter went into meltdown over the weekend, fearing that Credit Suisse number could be up. It could become the next Lehman moment for the global financial system. This is why this is happening. Well, Fox Business actually reported that, while talking to the market, they heard that apparently one global financial institution or investment bank was on the brink of a collapse, and everybody thought that that ought to be Credit Suisse. Why? Because Credit Suisse stocks, if you look at them, with the entire malaise over the UK, pension fund system and the gilts market there, that stock actually is sitting at this record low, a fresh record low at this point of time. And also, the cost of insuring yourself, if you're a bond owner of Credit Suisse, the cost of insuring yourself against Credit Suisse defaulting on those bonds have now shot up to levels last seen in 2008. Now, this is basically the CDS that we could talk about, the credit default swaps, which were the most in thing back in 2008, Santo, and you would know most about it. So it seems like the market, just 2 weeks ago, it was only inflation. But in the past 10 days, Santo, is financial stability, which has become the topmost agenda for central bankers.
Well, the picture for Credit Suisse at this point clearly does not look pretty at all, and there is a lot of chatter that we have now moved past the inflation crisis, and now we could be staring at what possibly looks like a credit crisis. But a few things here, there's this urge to quickly compare it with the Lehman moment, and at least Credit Suisse stock price and the sharp rise in the price of the credit default swaps seem to indicate that something is not well. But how serious it is at this point?
One contrarian indicator you will love, Santo, is the fact that over the weekend, Reuters reported that Credit Suisse chief actually sent out a memo telling his staff that you cannot corroborate the fall in the stock price with the capital position and liquidity position of the bank, which remains very strong. Now, ardent followers of financial markets will go back to memories of Yes Bank just prior to, the diamonds, his shares being diamonds. You talk about Lehman Brothers. Just a week before Lehman Brothers went belly up, their chief had actually said that they have enough capital at this point of time.
Well, yeah, that said, CJ, there is reason to believe that Credit Suisse could be in some kind of trouble. The chatter at this point in time, we don't have any confirmation of that, is that the sharp spike in bond yields that would have considerably diminished the value of the collateral that typically investment banks pledge, and it's, most of them, almost all of it are leverage trades. So they keep collateral, and then with that they build fresh positions. So the moment bond prices go up, bond yields go up, bond prices fall, the value of the collateral is down now, which means that you have to bring in additional capital, and when the market smells blood, that becomes all the more difficult. So it is that kind of a scenario that seems to be playing out. But most important is what are the kind of assets that probably Deutsche Bank and Credit Suisse are holding at this point in time. Remember, back in 2008, most of the collateral were toxic derivatives, which were very hard to value. That does not seem to be the case at this point. It seems to be stress of a different kind. Now, stress we can see there, at least going by the stock price reaction and the price of the CDS. But how serious it is? The other indicator would be the overnight call rates, which still aren't showing any signs of panic, at least at this point in time, which is leading a section of the market to say that the whole thing is just being blown out of proportion. But we still don't know.
Yeah, my Santo, my limited argument is that you never see a crisis coming. Most crises, I mean, only a few. I mean, if everybody has been talking about a crisis, it generally turns out that it does not.
Social media tends to amplify things. Let's not forget that. And you yourself mentioned there was a financial Twitterati meltdown.
Yeah, definitely, definitely. And the other caveat here is that, of course, listen, one of the big things that we came out, the changes that came out after the Lehman moment in 2008 is that central bankers across the world came together and decided that we need to list down the banks that are so important that we cannot let them fail. And one of Credit Suisse and the Deutsche Bank both are actually systematically important banks for the global financial system. So if there are concerns, you can bet your money that central banks across the world, or the region-specific central banks, will intervene to make sure that they do not cause a Lehman moment. And I think that is where probably the fears are a little overblown. But that said, the only concern would be that in periods of such uncertainty, you expect managements to recoil a lot. You don't expect them to continue to spend a lot. You don't expect them to hire at a very fast pace. So that is where the problem could be. Could lending squeeze up, as we had seen, Santo, if you would remember, when our own little Lehman moment happened back with INFS in 2018. Bankers were not willing to lend anymore. I mean, people who were getting auto loans will no longer be able to get auto loans.
It all begins with a liquidity problem, which then quickly tends to, if not checked in time, becomes a solvency problem. But the bigger focus here would be on IT stocks at this point in time. How are they likely to react? Remember, BFSI is a significant chunk of earnings for Indian IT services companies, and if there is any kind of problem with the financial system in the US, that could certainly have implications for IT stocks, and I would be very worried of them.
Well, Santo, your point has merit, but I think, therefore, I think the September quarter earnings now presumes a lot of importance. Next week onwards, of course, from Monday onwards itself, TCS, HCL Tech, Infosys will be declaring their Q2 earnings, and it will be very important whether they retain the optimism that they have been showing throughout investor conferences between June end and so far. So far, IT companies have indicated their demand position remains strong, their pipeline is very strong, and they have not faced any sort of client spending cuts despite all the macro challenges. So for me, I think, Santo, the Q2 scenario will largely be robust, but I think the commentary will be able to provide us more insight. And my limited point with IT is also that right now we are sitting in probably the biggest annual losses that we have seen since 2008. Usually, those sort of opportunities tend to those sort of corrections tend to be opportunities in the long run. And I think risk reward in this sector may be getting very attractive for a lot of long-term investors out there.
That said, how is the market looking this morning?
Well, Santo, before I get down to the market, just a quick, did you know sort of a thing? Watch out for silver today, guys. Silver market, Santo, is looking like it's going to squeeze up because apparently there is no inventory for silver. And silver is an industrial metal. It has been shorted to the bits because of the global slowdown fears, and watch out for that. That said, our market is looking quite weak this morning. If you look at the SGX Nifty futures, they're indicating a more than 100-point gap down opening for the Nifty this morning. The cues are quite bad, as we spoke about it. Wall Street on Friday did end with more than 1% cut, largely on fears of global recession, plus some of the incremental data that came out from the US. Santo, it indicated that the economy is doing quite fine. I mean, where is all that worry about that there will be a recession? Because the economy is doing quite fine, and therefore the Fed has no real reason actually, apart from probably some investment bank going belly up, to curtail on rate hikes. That said, watch out for FIs as well. They have been net selling quite, vociferously over the past week or 10 days. And with concerns around global financial system, with the risk aversion being high, you could expect a big selling number today as well, Santo.
Well, I think it's mostly chatter about the health of Credit Suisse and Deutsche Bank that could keep the investors jittery this morning. And as CJ also pointed out, FI selling has been quite intense. The temptation would be to rush in to buy, but given that we are just on the verge of the earnings season, it makes sense to wait and watch.
But BTFD all the way, guys. It's your risk appetite.
Well, that said, let's quickly dive into the stocks on our watch list this morning, beginning with Suzlon Energy. The stock could see some near-term pressure after the unfortunate and untimely demise of its founder, Mr. Tulsi Tanti. Also, the stock has gone ex-rights from today, which means that there's additional floating stock in the system at this point in time. Yes, the company has been doing well in terms of trying to reduce its borrowing. There's been some improvements clearly, but at this point it's more the near-term picture, and I think that's where the pressure could come in.
Yeah, I mean, Santo, clearly promoters, the unfortunate demise of the promoter is clearly a setback for the company as far as sentiment is concerned. But I really don't think that it will affect the operations of the company going ahead, and therefore any sort of a correction today, I don't think would be something that will be a long-lasting phenomena for the stock. Apart from that, if you look at the company itself, the recent revival that we have been seeing, especially post-COVID, where the company has tried to reduce its debt, it has been trying to restructure a lot of the debt that it held prior to COVID. I think that has built a lot of the confidence in the market, and you can see it in the stock performance over the past 2.5 years. And of course, Suzlon is in a very, very attractive sector at this point of time. The renewable energy space is a very fast-growing space, and while yes, Suzlon individually benefits Santo, but you could also bet that probably some of the bigger players out there who are trying to get into the industry or expand their, scope, may be looking at Suzlon as an M&A target in the future. Well, the first stock on my radar today is, one of the biggest stocks on the Nifty, that is Reliance Industries. The stock is likely to be in focus today on two parts. First, of course, the government's fortnight review of the special additional tax that it had imposed on petroleum exports and diesel exports. That was reviewed over the weekend, and fortunately for RIL, the news is that diesel export tariff has actually been reduced. It's been almost been cut into half. So that should be a good booster in the near term for the stock. Apart from that, the stock has been hovering around the 2300, 2400 level, and the analysts I speak to, or dealers I speak to, Santo, they are indicating that although there has been short positions built up, but there is also some good level of buying happening in those levels. So clearly, that level could be a good support and could be a base for a new uptrend on the stock. I spoke about it last week as well. Some people are betting on a 2800, revival rally on RIL going ahead. So that is one stock to watch out for. And apart from that, the launch of the 5G services, for India over the weekend, it happened, and RIL is looking to, spread the services pan-India by December 2023. So 5G on the consumer-facing side, and of course the diesel tariffs being reduced on the energy business side should be a good trigger.
Well, I just maintain my stance on this one. 2800 is the key level that I would look for. The stock has failed to cross this quite a few times in the past, and unless it crosses that, I'm not really
that remains the level to watch out for, definitely.
SpiceJet, the next stock on a watch list. Now, till about a month back, there were these rumors about the company being on the brink. At least I think that phase seems to be over.
The Credit Suisse of the aviation sector.
Yes, that phase seems to be over for the time being. Also, the stock has been finding support around 35 rupee levels. It's I would say at this point in time, it's a risky
I think, Santo,
bet.
before we get ahead with Suzlon, SpiceJet, let's quickly take a check at the market. When the market has opened, it seems like a decent start, Santo. I mean, not as bad as we feared.
Probably it could get worse as the day progresses. A lot of demand for second line stocks at this point. At least that's what the advances to declines ratio is indicating at this point in time. 1136 gainers and 728 losers. Mid cap Nifty Nifty mid cap is down by about 0.2%, Sensex down by 0.3%, and Nifty Bank down by 0.4% at this stage.
And Santo, if you look at some of the gainers on the Nifty, there are ONGC, Eicher, HUL, Eicher, of course, after very, very strong auto sales data for the month of September, and of course followed by Maruti Suzuki, Britannia, and Power Grid. So some good names seeing buying at this point of time, but it's the small and mid cap space clearly providing strength to the market, while the large caps are taking it a little bit weaker at this point of time. Sorry, Santo, coming
back to SpiceJet, it's the holiday season typically, which works well for aviation companies. Besides
holiday season for whom? I don't think it's for you and I.
Well, the festive season is kind of the holiday season, I would say. We've got the Diwali vacations coming up, and in this quarter again you will see the Christmas vacations as well. So there's the time when people travel, and that's good news for aviation companies. As I said, CJ, the stock seems to be now finding support around 35 rupee levels, and with aviation turbine fuel prices also coming off quite sharply, I think you could see some improvement in the company's fundamentals.
Well, Santo, I am in general worried about the aviation space, but within the aviation space, I'll probably say I'm most worried about SpiceJet at this point of time. If you look at, if investor confidence has to come back into the stock, the company's financial at this point of time require a major overhaul. They have been trying to, manage the situation so far, but clearly there is stress as far as the financials of the company is concerned because of, the high cost of fuel that the company has been facing. That has really been a constraint on the growth. Apart from that, of course, there is a battle for market share that is going to ensue in the aviation sector going ahead. And according to a lot of people out there, SpiceJet seems more vulnerable because Indigo has a large cash chest. Yes, it will also be face some heat, but it has a big cash chest to fight off or ward off a lot of the newcomers. But SpiceJet does not have that luxury, and I think that is where my concern is for the stock. Well, the last stock on my radar today is Hero MotoCorp from the auto sector. Well, this is one stock that has seen a lot of strength in this market, while the broader market has been quite weak. But I mean, every month, the data comes out and it just goes to present more and more evidence, Santo, that things are not really working out according to the script for Hero MotoCorp. If you look at the September auto sales data, it was quite tepid. Two-wheeler sales, total two-wheeler sales fell almost 2.1% on a year-on-year basis, indicating clearly that while the rest of the sector is facing some decent amount of demand, Hero MotoCorp is still facing a lot of softness. Now, for me and a lot of analysts out there also, they have indicated that Hero clearly seems vulnerable to more market share loss because of the strong game that we are seeing from TVS Motors and Bajaj Auto as well. Apart from that, within the two-wheeler space, if you really want to play that space, I think Eicher makes for a more better, a better bet than probably Hero MotoCorp, because Eicher largely, focuses on the premium segment, the luxury segment, whereas Hero is more focused on the lower strata of the income at this point of time, which is clearly struggling.
Well, at least the price action seems to indicate that the sentiment for the stock is quite weak at this point in time, and again the market share loss also clearly seems to be proving at least the naysayers in the stock right at this point in time. Not very sure about the comparison with Eicher Motors and
what my point is that if you want to be in the two-wheeler space, then probably betting on the big buyers is better than betting on the small buyers.
Very true. Premium has had a good run. Now maybe it could go on further also, but at the same time I would say that if you are looking for the margin of safety, two-wheeler is where where there's been a huge underperformance for some time now. So if you were to take a slightly longer term view, probably you have more safety in betting on some of the names like Hero MotoCorp and Bajaj Auto. Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do remember to post your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading day.